Most traders overcomplicate trading with tons of indicators, but what if I told you that the easiest and most powerful strategy doesn't need any indicator at all? In this video, I'm going to show you a simple support and resistance strategy that can help you find clean, high probability entries, even if you are a complete beginner. So stick with me to the end of this video. Immediately after our intro, we'll jump straight to the main point. Welcome back to AFTechTrades. Here we make trading simple, clear and effective. If you are new to the channel, make sure to subscribe because I post easy trading strategies you can start using right away. Now, we need to know and understand what a support and resistance is. Let's start with the supports. Support is a level where price stops falling and bounces up. Think of it like the floor that holds price. Imagine the floor in your house, right? Just imagine it's that, okay, once a price or the market gets to that particular floor, that's the down, it bounces back. So put this at the back of your mind as the support zone. So anytime you see that usually a market moves and gets to a particular place but couldn't break that place but rather bounce back, put it at the back of your mind that this is definitely a support zone. So what you do is to mark out that zone. Then the resistance is the opposite. It's a ceiling. You assume that one as a ceiling where price struggles to break above and usually draws back down. So the resistance, you just assume it as a ceiling of your house, right? Where a market price goes and can't break. It gets there but usually drops down. Immediately it gets there, it drops down. It couldn't break. So once you've noticed that happening on the market, what you do is that you mark at that zone that, okay, this is my resistance zone. The key idea, market moves between these levels all the time. Traders who can identify them early get in before the crowd. I hope you get. So once you can identify this, then you know exactly what to do. You know that, okay, once price gets to the support level, you should be anticipating for a buy market. Once price gets to the resistance level, you should be anticipating that, okay, it will definitely bounce. Okay, now it's at the ceiling. Now it will definitely bounce, so I should be selling. I hope you get this. Now, how do you draw this support and resistance zone? Now we said, okay, now this is daily time frame and this is gold XAUUSD. How to draw the support and resistance zone? As the name implies, it says zone, right? So you should be using your rectangle to draw its shape, to draw it, right? Instead of using just a bare line, because it is called a zone. So we'll be acting with the zone. I hope you get this. We'll be acting with the zone. So you mark out that zone. This is clearly a resistance zone I'm marking out for you now to see. Good. You can see. So you mark out just the edge of the candlestick. So now you see this entire place is the zone. This entire place is the zone. Now let me take it to a lower time frame. Let's go back to like 4-hour time frame. Now here is the 4-hour time frame. You know we have marked out our resistance zone because we noticed that on the daily time frame, price keep getting to that zone and bouncing back, right? You see? Let me zoom in for you to see very well. Sorry, my system is a bit lagging. You can see, I hope you can see. So now you can see what happened. You can see what happened around the zone we marked. Once market get to that zone, it bounces back. You can see Let me mark it well for you to see. Let me mark it out for you to see. You see? Yeah, we have a fake breakout actually. We have a fake breakout that will teach you how to trade this strategy. There are entry criteria you need to use for you to trade this strategy. You can see we have it came to this resistance zone. Then what happened? A sell came in. You take a short position because you already marked out the zone. The only thing that can invalidate this is when there is though you cannot take this first trade because that is where the resistance started. So the trade you take is from this side, remember? So now you take a long position. You put your stop loss just above the resistance zone. You take a short position, sorry. You put your stop loss just above the resistance zone, giving it some breathing space because of fake breakouts. You get just like this one now is a fake breakout, right? And you target what? Sorry, my system is a bit lagging. Ooh. Okay. So let's say you entered after the close of this candle, because we have the rule. The rule of trading this strategy is that you have to wait to see a rejection candle or an engulfing candlestick before you enter. So this big candlestick, this big bearish candlestick you can see is a rejection candle, right? You can see how the market plays out. You can see how the market plays out. Now if you check again, you see that we have another touch on our resistance zone, right? So you're out of the market, you won't enter this market, you wait for it to come to your zone. Right now the market will expect you. Like I said, the only thing that can invalidate this is when a candlestick closes above it. A full body candlestick closes above your resistance zone, right? So now you enter a short position. After you've noticed that, okay, there is a rejection candle and an engulfing candle, if you notice, you can see this green rejection candlestick. Buyers were in, then sellers came in to push it down. Then we have this big engulfing red candlestick, right? So you enter your trade and your stop loss will just be above the resistance zone, right? Give it a little bit breathing space because of fake breakouts. Then you can see how this market plays out. You can see how the market plays out, right? You can see how the market plays out. See another touch again here, which we already marked out also. You can see. And we said we are going to wait after we have seen rejection candle or an bearish candlestick, right? In the case of resistance zone, then we enter a sell position after the close of that candlestick. Now when this candlestick closes around there, and then you want to start having here. So and our stop loss will be just above our resistance zone, and you can see how this market plays out. You can see how this market. The most important thing is knowing how to spot these zones. Once you go to a higher time frame, you will definitely see that a support or resistance zone, there must be a support and resistance zone. The market must react to this place. You get, this market will definitely react to this. This is the most important thing for you to watch out and make sure you mark the zone correctly, right? So this is how you see. On the only thing that can invalidate, you can see there's a breakout. Like I told you, the only thing that can invalidate it is when a candlestick break out of that zone and closes above it. You can see there's a breakout here, and what happened, right? You can see how it shoot up to the upside. You get? So now let me show you an example for the support zone, so you can see how easy this strategy is. Now this is a perfect example of a support zone. What happened? You see that it is exactly like the resistance zone but the opposite direction. Remember I told you, if you are looking at the support zone, look at it as the floor of your house. And if you are looking at the resistance zone, look at it at the ceiling of your house. So now this is the support zone. Where is the floor located? At the down, right? So what happened on this particular zone? You will see, we notice multiple tests on these zones. You see? Notice multiple tests, and we mark out the place, mark out the zone. You mark out the zone, you see that you have marked out your support zone. What happened? Each time the market comes to this zone, it bounces up. That is where you take your long position. Remember, we said our stop loss must be below this side. Our stop loss must be below the zone. You see? So you put your stop loss below the zone. Let me show you one example. You enter a long position, right? After you have noticed there is a rejection candle, you see it came and tapped into the zone. And what happened? We saw a rejection candle, right? And what you do, you enter a long position and you put your stop loss just below the zone. The bonus tip to increase your accuracy, check for confluences. That means extra confirmation, like maybe a trend line touching the zone, or maybe your psychological level. We've done a video on how to draw proper trend line and psychological level. You can check our channel. You will see those videos, right? Or you check the previous high or lows. You can see the previous high or lows. You can target that as your take profits and your zones, right? So when you combine this confluence with a clean rejection candle, that's where your best trades come from, right? So let's quickly recap this simple no indicator strategy. Number one, what you need to do, I said you should identify clear support and resistance zone. That's the number one thing you need to do, right? Secondly, I say you should wait for a strong rejection candlestick, right? Then thirdly, I said you should enter the direction of the bounce, either it's support or resistance, depending on which one you identified, right? So now, next thing I said is for you to manage your trade with proper stop loss and take profit. This is very, very important. Know how to set your stop loss below the support if it is a support zone, and if it is a resistance, you know how to put it also above the resistance zone. So that's it. No fancy indicator, no confusion, just pure price action. If you find this video helpful, make sure to hit the like button and subscribe. Turn on the bell notification so you don't miss more simple and powerful trading steps from AFTechTrades. Until next time, trade safe and stay consistent. Bye.